Hello day traders, I'm Maria Starodop and this is the review of crypto analytics from fx.co. It's the 16th of February today, Thursday, and in our today's review, first we will discuss the scandal between Coinbase and American Security and Exchange Commission, how things go and how it affects the crypto industry, and then we will get to technical picture of first Ethereum and then Bitcoin. We will start with an article by Sebastian Seliger and some news first. A news about the scandal between Coinbase and U.S. Securities and Exchange Commission. These things is in the spotlight in the crypto world over the past few days. The suspicions against the Kraken were confirmed and bore fruit in the form of a fine. For this reason, now Coinbase is in the spotlight and it affects the mood of Coinbase investors and customers. However, according to Coinbase, staking is not a violation of the Securities Act. More importantly, Coinbase stated that forced staking under the Securities Act will be detrimental to users. This form of regulation through enforcement could push US users into unregulated offshore markets. Although new developments are taking place, Ethereum validators and Ethereum network remain undeterred. And according to staking rewards, so far the number of validators on the Ethereum network continues to grow. More specifically, the Ethereum network has seen an increase of 3.5% in the last 30 days. Growing revenue generated is one of the reasons why the number of validators continues to grow despite the negative press and around staking. Only in the last month, validators generated an increase in revenues by 32.81%. Additionally, the overall Ethereum hash rate also increased. And currently around 14% of all Ethereum is staked, and this number may change after the Shanghai update. Most Ethereum is staked through Lido and other centralized exchanges. As for Ethereum itself, its technical picture, let's have a look at the chart. So, the key technical support on Ethereum, which is located at 1,487, was tested by bears already, and now the market is trying to bounce. The bulls has broken above the local trend line, orange line in the chart, and continue to move higher towards the 50 moving average, 1,576. Only a clear and sustained breakout below the level of 1,487 would change the short-term outlook to bearish. So, Sebastian says, please keep an eye on the 1,487 technical support. Any violation of this level would likely extend the drop towards 1,345. But in order to do this, the volatility must increase significantly. The key technical support for bulls at 1,281 was broken already, and the new swing low was established at 1,074. There is a clear test of the 50 weekly moving average located at the level of 1,080, so any breakout below the moving average and a weekly candle close below moving average will be considered as another indication of the downtrend continuation. If the down move will be extended, the next target for bears is located at the level of 1,000. Okay, let's have a look at the chart. And we see a significant rise in Ethereum. It opened today, the 16th of February, at the point 1,688, and now it is trading at 1,692. Oh my God. So the real picture is far far above the most optimistic forecasts. It's really higher. It's far above the 50 moving average, and even higher. So for sure, it's not a downtrend. Ethereum is moving up, and probably it will continue its bullish trend further. And now let's have a look at the flagship cryptocurrency Bitcoin and the next article by Ralph Shadler. What's happening with Bitcoin? Bitcoin is also rising, of course. It rallied in the short term and it seems unstoppable, Ralph says. It's trading at 22,802. At the moment of writing, it was late yesterday evening. It increased by 3.98% from its daily low to its yesterday's high. And the current rally helped altcoins to jump higher as well, as we have already seen. Still, after its strong growth, we cannot exclude a temporary drop. Ralph says the rate could come back to test and retest the near-term support levels before resuming its growth. Bitcoin ignored 22,314 and the downtrend line, confirming strong buyers and larger leg higher. After its strong growth, the rate could come back to test and retest the broken levels before extending its swing higher. The weekly resistance 23,000 stands as the next upside target and obstacle. Bitcoin could find resistance around this level. So his forecast that drop is following the dropping little, testing and retesting the broken downtrend line in the 22,314 level could bring new long opportunities. Also, valid breakout through the resistance level activates further growth. Okay, let's have a look at the chart of Bitcoin for the moment. And again, the same picture. It's far above forecasts. Bitcoin opened today at 24,601. Now it is trading at 24,685. So it's really far above the resistance 23,000, even much higher. So as we can see in the chart, it's moving upwards so far, and probably it will be doing that for some time. Okay, that's all for today. We'll see each other in our next review tomorrow, and we'll of course see the picture tomorrow again, how things will go. Of course, I wish you a profitable trading and successful day, and till next time, goodbye.